Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Wednesday, January 24th, 2018, and this is a special edition of the Gold Forecast, our daily report. There is a new sheriff in town, and it certainly isn't the U.S. dollar. Dollar plunging, free-falling to new lows today, and gold reciprocating, closing up about $21.10. 1357.80. That, of course, is basis the February contract. There is also an April contract. The spread between the two, about $4 or $5. We rolled over, in essence, pulled profit on our trades today. Of course, we'll discuss that in detail as we pull up our first couple of charts. Silver, runaway freight train, 1756, up 65 cents. We did not put commentary today because of the activity in the dollar and gold, so we will cover silver in detail on tomorrow's show, and finally U.S. dollar. Now, it only closed down about 0.9%, 88 points, but the key is it broke through major support levels. It's at 89.03. Our target right now is 88.50, as you know, and as you'll see on today's show, if it breaks through 88.50, we could see it go as low as 84. Traders, by now you know the news. Gold experienced a dramatic upside spike today, settling up about $21.20. As it currently stands, it is at $357.90, a net change of about 1.5%. What is most interesting about today's move, of course, is dollar weakness, and we'll talk about that in its entirety. But considering the previous close, and the close that I'm referring to occurred in September, when on a closing basis, gold reached a high of roughly $13.50, and that is this area here. We have absolutely taken out that particular price, and as you can see, today's close is a really solid close above that price point, which brings into light where our next real level of resistance is. We'll discuss that in a moment, but first to our current trade. I did send out a trade recommendation today to actually go ahead and pull profits on our current trade. We went long at 12.65. Depending on when you got out somewhere in this area between 58 and 59, and that, of course, is the February contract of gold. And I also made the recommendation to roll the position over. So in essence, simultaneously, you would be buying the next outer contract month, and that, of course, is April. And April gold closed at 1262.90, net change up 21.20. Now, the key there is really the spread between February and April, which is roughly $4 to $5 higher. So in essence, it is going to be marked as a profit that we got out of on our last trade in at 12.65, out at 13.58.59, and then our next trade is going to be initiating a long position in gold at approximately 13.63. The key there really is a matter of the spread between the two contract months. So now you should be long April gold. And then the question remains is, where do we put our stops? And because we had such a sizable move today, initially I had looked at a price at 13.50, and let me explain where that price of 13.50 comes from. And that is taking a look at the former sets of highs that came in at around 13.50 and obviously placing them below this particular price point. So you want to keep your stop rather loose, and I would say to put it somewhere around 13.45. So maintain your current long position, and that is in April gold, and then place a stop at 13.45. At the same time, we will be looking at gold as it stands in the most current contract, but that in about a week or so will convert to the April contract as this converts and this particular contract expires. Now that gold has taken out the former highs, and that was really our target was simply to take out these highs that sat at around 1263. But now that those have been matched, where can we expect to see gold pricing go to? And the key is this: once we have some sort of substantial close above 62.63. We really only have one real target in mind, and to see that target, we've got to go back to 2016 and the highs that came in roughly at around 1380. Now, we effectively have taken out the closing price that was the high point, or the high closing price that occurred in September of last year. And if we continue on this path, the next real target has got to be 1380, with 1400 clearly as a potential or a possibility. And the key to whether or not we're going to see this market move higher has to be all about the US dollar. And traders, it becomes dramatically clear the type of pressure the US dollar has been under, considering that it was trading up at around 94 as recently as October and through December of last year, and then began to fall. This fall here, which starts at around 94 with the market 89, is literally a 5% drop in dollar value. And the key is this: on a technical basis, as we've talked about over the last couple of weeks, this is nothing new, but we talked about the fact that on a technical basis, we don't really have any real support until approximately 88.58. That is a 61.8% retracement of this long move from, call it 79 up to 104. And because of that, if we do see the dollar break below this particular price point, the next real target doesn't come in till about 84.50. That is the 78% retracement level. And we certainly can say that we have the dollar in an absolute free fall. When we look at the way that the market actually rose during this period, you can see that there's no real area that you would peg any kind of support or resistance. You had pretty much a linear line except for this little dip, and this dip occurred right at 78. So we have to watch very carefully and see what the dollar does over the next couple of weeks, and whether or not this particular price point, should the dollar continue lower, which I believe it will, should we get some sort of a bounce here, or will it continue to free fall and move to lower pricing? Because a move to lower pricing and a break below this would mean a significant spike in gold pricing, and that, of course, would take gold to $1,400 per ounce. Traders, this morning we sent out a special trade alert recommending that it is time to take profits. We entered our trade at 12.65. We exited our trade roughly at 13.58, 13.59. We also recommended that you initiate long positions on your April position of gold, and we put in recommendations for stops at 13.45. It has certainly been a landmark day and a profitable day for us at the Gold Forecast. This has been Gary Wagner wishing you, as always, good trading, and I'm glad we were able to deliver that to you today. Bye-bye.